Hi, Scott Nelson for Boulay Financial Advisors. Welcome to the video version of our Market Perspectives newsletter. This is the third quarter of 2020. It's October. Happy autumn. As you can see, we're still working from home. For the most part, we've adapted the technology and the routines that it takes for us to keep connected with all of you. And I hope you enjoy this video as one more way that we can do that. So let's go take a look and see what happened in the third quarter of 2020.
While the official third quarter GDP numbers are not in yet, it has been estimated by Goldman Sachs and others that the economy grew between 30 to 35%. Approximately 3.8 million people returned to work in the quarter. Now, together, those are fantastic numbers, but the economy still remains down approximately 10% from where it was in February. Of the 22 million jobs lost in the spring, 10.7 million approximately of those jobs have yet to return. Much of that loss is concentrated in the entertainment, travel, and restaurant industries. So while the housing sector has been a bright spot, many economists say that the easy growth of this recovery has been recaptured, and they expect the overall recovery to slow until a vaccine is available. Looking at the stock market, we see that there were some strong performances. The S&P 500 hit a new high in August before pulling back a bit in September, but it still finished up the quarter a very respectable 8.9%, and it's up over 5% for the year. The NASDAQ Composite Index, with all of its tech companies, also hit new highs, surging to 11% for the quarter, and is now up over 25% for the year. Global stock markets also had a good quarter. The MSCI EAFE index moved up nearly 5%. Year to date, though, that the global index remains down approximately 7%. When we think about your portfolio allocation going forward, we see broad diversification as the smart strategy as we eventually emerge from the pandemic. The U.S. stock market has been carried upwards since March by technology, health care, and consumer cyclical sectors. We saw a bit of a market pullback in September, and that appears to be an indication that those sectors are running out of steam. The pandemic has made things for small companies, but as well as you can see large companies in the financial services, real estate, and energy sectors. It's those parts of your portfolio that have struggled this year that are likely to have the most upside potential as we emerge from the pandemic. Another reason for the stock market rally is that some investors have been doing a bit of shifting from bonds to stocks. And that's because the bond yields still remain near historic lows. You can see the yield on the 10-year Treasury bond has shrunk from a little bit over 3% in 2018 to less than 1% at the end of September. Still, demand for bonds remains positive. You can see how the third quarter returns on the bond sectors are still in the green. Now, the flight to safety by investors is part of the reason for low yields, but also the Federal Reserve's bond purchase program that was expanded to deal with the liquidity issues we saw in the bond markets during the March pullback. The Fed learned its lesson in 2008 with the Great Recession to not let a liquidity issue get out of hand. As a result, the Fed has purchased over $2 trillion in U.S. Treasury, municipal, and corporate bonds in 2020. It's the Fed's willingness to buy nearly any investment-grade bond being issued that's keeping the bond market stable, but it's also keeping yields low. Additionally, given the economic situation, the Fed does not expect to raise interest rates anytime soon. Finally, we would be remiss not to mention the upcoming election. The twists and turns of this 2020 election season seem to know no end. With so many Americans choosing to vote by mail, it is possible that a definitive result may not be known until sometime after Election Day. So expect the markets to be frothy during that period and susceptible to overreaction to every little bit of election news that comes along. Well, that's our review for the third quarter. We hope you found it informative. If you have any questions about what was covered, please reach out to your Boulay Financial Advisor for more information.